This is the Savvy Investor radio show and podcast with Mike Kinnett and Ryan Herbert of ProStatus Financial, now celebrating 20 years helping families build successful retirements and lasting family legacies. Mike is a financial planner and estate planning attorney with a master's degree in tax and 4-time Amazon best-selling author. Ryan is a 5-star Wealth Management Award winner and top-ranked financial advisor by Forbes. Now, the Savvy Investor radio show and podcast.
Thanks for joining us here on the Savvy Investor Podcast. Nothing is certain but death and taxes until now. Welcome. We're going to talk about something that is very important if you are planning for retirement, and that is, should you have a tax planner? I'm going to go to page 15 in Mike Kinnett's book, Nothing is Certain but Death and Taxes Until Now. And by the way, if you want a copy of this, you can click the link in the description below and make sure to ask for your very own copy of Nothing is Certain but Death and Taxes. But Mike, page 15, you say, how can a person provide investment advice without actually understanding the tax implications on that advice? So I'm going to open the floor to the two of you here. It seems obvious, but we'll pose the question here. Why do we need a tax planner for retirement?
Well, at the end of the day, let's just use an arbitrary number. Let's say you have $100,000 or you have $1 million. You have a choice. Do you want to be able to use all $100,000 yourself? Do you want to be able to use all $1 million yourself? Or do you want to give $30,000 or $300,000 to the government because you think they're a better steward of your money? If you think you're a better steward of your money, you need tax planning. If you think the federal government's a better steward of the money, you need no tax planning whatsoever. I mean, it's just the way it works. I just was talking with a client the other day. It's interesting. He came in from the radio. He was listening to a podcast and following us. And his situation was such that he was selling a business, and it was a big number. It was a big number. And, he'd seen commercials on TV that if you have questions, call this particular CPA consulting firm. And it's one of those firms that have offices all across the world, thousands and thousands of CPAs, thousands and thousands of attorneys. And he had talked to them about something that we had talked about on the radio and on our podcast and on the YouTube channel. And we've talked about what are called deferred sales trusts. And it's a mechanism that if you're going to sell your business, you can do it in such a way that instead of having to pay taxes up front, you only pay taxes on the money as you use it. So, in this situation, he was selling a business for about $40 million. That was going to be the profit. And the way they were describing it to him, he basically had to pay tax on all $40 million up front, which is insane. I mean, that's just insane, because the way we described it to him is that he wouldn't have to pay tax on any of the $40 million. He'd only have to pay tax as he took $100,000 out a year, because that was the income stream he wanted. Between that and Social Security, $100,000 a year would satisfy his needs. So we explained you only have to pay tax on 100. So he's talking to us, he's talking to them, and he decides he wants to get the two of us together. So I am talking to a senior partner. She is a partner of this big old, box store. And she's explaining to me that this is a listed item, a listed transaction, which is a bad thing with the IRS. You don't want to be on their listed transaction list. She's explaining to me it's a listed transaction. She's sending me, we're talking back and forth, and she's bringing up the rules, and I'm reading the rule, and there's a rule out there, and it's a position the IRS has taken. And I said, yeah, but see, that says monetized installment agreements. We're not doing a monetized installment agreement. She goes, yeah, it's the same thing. No, they're not. They're absolutely incorrect. And if you go do the research on deferred sales trust, the IRS has actually given its blessing and said you can do deferred sales trust. The attorneys we use, because it is an advanced planning, they've been audited a dozen times and survived audits every single time because we follow the IRS rules. And as long as you follow the rules, imagine this guy being able to sell a $40 million business, and he had a choice. He could pay over $8 million to the IRS, and he could pay basically another $4.5, almost $5 million to the state of Maryland. So he could lose $13-14 million.
Wow.
Or he could have all $40 million to his advantage. And just think about the time value of money on $13 million. You give it to Uncle Sam. What is it? About 2 computers and a toilet and a hammer, right? I mean, that's about $13 million. The state of Maryland, what did they buy with their $4.5, $5 million? 100 feet of road. I mean, it's just insane. I don't even know 100 feet, probably 10 feet of road. It's insane. Why give them your money when you don't have to? And that was our position with this guy. And if you have these type of questions, if you're trying to figure out, do you need a tax planner in your life that does financial planning? Michael, like you said, how can somebody give you financial advice? How can they give you a recommendation when they don't understand the tax implications? And quite frankly, half the time, those people that are giving you tax recommendations don't actually understand the tax. I was talking to, senior partner. That's what it said. Senior partner, tax division. Senior partner, tax division. She's quoting me all sorts of, absolutely, she was quoting me the law. She was quoting me a law about driving cars and we own a boat. I mean, just absolutely irrelevant to the law she was quoting. And she was going to give this guy advice to go ahead and pay $13.5 million. Now, everybody doesn't have a $40 million gain. I get it. But this is true if you have $1 million gain. This is true if you have a $500,000 gain. And you know what? If you find yourself in that position, there's a little button right below here. Click that button, link to our webpage, sign up for a time to sit down with Ryan, myself, and our team. And we'll go through the tax planning. We'll go through the estate planning. We'll go through the investment planning with you. Just click on that button below. Now, if you click on the button below, you have to like and follow and subscribe to us here on the YouTube channel.
Yeah, do that. And we'll also kick in the book, Nothing is Certain But Death and Taxes, as well. So to simplify this, what if someone says, hey, I've got a tax person, I've got a CPA, I've got someone that prepares my taxes every year. I'm good, Mike. What's the difference between a planner and a tax preparer?
Well, a tax preparer, someone who does your taxes every single year, you're probably only seeing them once a year if you're seeing them at all.
Incredible historian. Yeah, he's good about putting numbers on a page. You're
giving them information and they're putting numbers on page. And then when you have a tax problem, you have a tax issue, you have a question, they're giving you an answer just based on what they are going to do on that tax return. And similar to Mike's situation with this client selling a business, I get questions all the time by people that have rental properties. I want to sell my rental property. Here's how much money I'm going to make. What's the tax damage? I want to sell my business, obviously not in that $40 million number, but $1, $2, $3 million. I want to sell my business. I talked to my tax person and they said, oh yeah, we'll just do we did a dummy return for this year. We did a projection. You're going to owe $30,000 to the Fed and $10,000 to the state. Just go ahead and send off the estimated payment.
Or $500,000 to the state for that.
However much it is. Here's how much you're going to owe. Send off the estimated payment so you don't pay any penalty. That's it. That's as far as they go. Like Mike said, they're just historians. It's just putting numbers on a page. There's no creativeness to it. And I can't tell you, honestly, in the last probably month, the number of people that I have had come from, from our YouTube channel, from our podcast, from our radio show with questions. Hey, I'm going to sell this asset. Here's how much money I'm going to make on it. What are the creative things that we can do to help me avoid or maybe defer some of these taxes? Because I'm not getting this information from my tax person. I ask them the question. They just tell me how much I'm going to pay.
We have to come back after October 15th. And then they're on vacation from October 15th to January 1st. And then they can't talk to you because you're getting ready for tax season.
Yeah. But the answer always is, I'm asking them for this advice and I'm not getting it. And so if you're in this situation where you have tax questions and you're asking your CPA, you're asking your accountant, you're asking your tax person, what can I do? And all they're telling you is, here's how much money you're going to pay. Too bad, so sad. I encourage you to click the link in the description below. It'll take you to our website where you can schedule an appointment with Mike and myself, and we can walk through your tax problems. But also, don't forget to like and subscribe to the channel. And unfortunately, just people selling assets is not the only time that they have tax questions. You want to take money out of your 401k. You want to take money out of your IRA. There are tax implications for doing so, and it's not just, all right, if I take money out of my IRA, here's how much money I'm going to pay in taxes. It can affect how much tax you're paying on your Social Security. It can affect your Medicare costs. It can affect the taxes on all of your other income. And if you're asking those questions to your CPA, they're only giving you the answer, oh, you're going to take out $100,000. Well, send off 20 grand to the IRS and 7% for the state, and you'll be fine. That is what a tax preparer does. That is not what a tax planner does. A tax planner looks at all the different variables of what you think you want to do and give you the outcomes. If you do it X way, here's what happens. You do it Y, you do it Z, all those variables. That truly is the difference of having a tax planner versus a tax preparer.
And I would take it a step further. Here's a great example. We know, all things being equal, in 2026, that the estate tax and income tax is going to go back, right? We know that's going to happen. It's just retroactively it happens. There's a sunset provision. So we're seeing clients now, we're seeing people come in the door right now that have tax people in their lives, that have financial planners in their lives, that are currently worth, $2, $3, $4 million. And the conversation I'm having with them is, what's going on with your estate tax bill? What's going to happen about estate taxes? And to a T, across the board, what are you talking about? I don't have an estate tax problem, because everybody looks at it as $13.5 million. It's 13.6 for 2024. So I don't have an estate tax problem. Well, you know what? If you have $3 million today and you're 60 years old, you'll have an estate tax before you die, and you can take advantage of the estate tax rules today so that when you are 75 or 80 or 90 years old when you die, you won't have an estate tax. But you can't wait till 2026 to do it, and you certainly can't wait till you die to get it done. And that's just a prime example of what's missing in our industry. And when I say our industry, it's missing in the tax industry. It's missing on the investment industry. It's missing on the estate planning industry. It's something that all these professionals choose not to do. They choose not to be proactive. My cynical viewpoint it is they're afraid to be wrong. They're afraid to make a decision. They're afraid to give an actual recommendation, because what happens if they get it wrong, and it has to be fixed after the fact. But the reality is that there are so many people out there that are paying way, way too much in taxes when they don't have to. There's so many people out there that are going to pay so much in estate taxes when they don't have to, because all it takes is somebody who's willing to do tax planning instead of being reactionary. Let's plan for the future. That's what plan means. Let's plan for it. This way we know exactly what our tax bill is going to be each and every year, quite frankly, for the rest of your life. I mean, for the next 20, 30, 40 years, you should have projections out saying this is what the tax bill is going to be. If you want that, if you want to understand how that's going to truly impact you today, tomorrow, 20 years, 30 years, for the rest of your life, click on that little button below that says schedule an appointment. And if you do that, you have to like and follow and subscribe to the YouTube channel, because we'll look you up. And if you're not there, we're not talking to you. But yeah, click down there, click down there and have a conversation with Ryan and myself and our team. And we'll be able to actually do planning for you. And actually, we're going to give you a copy of our book.
Yes.
And Michael's throwing up there that how does somebody give a recommendation when they don't understand? It just absolutely drives me crazy.
You got to ask yourself that question. How can a person advise you with their investments if they don't understand what the tax implications are of that? And that is in the book, Nothing is Certain But Death and Taxes Until Now. Go ahead.
And Michael, I just want to throw this out there. When I was having this conversation with this president and partner of the tax department, attorney and CPA, the reason she gave that they're not willing to do it is it wasn't within their risk profile, which says I'm not willing to make a decision or give you advice because I don't want to be on the hook for it if it's wrong. That's what that statement said. And that's absolutely insane. How can you hire somebody that says, I can't give you the best recommendations? I can't even talk to you about all the options you have, because if one of the options turns out not to be a good idea after the fact, I don't want to be on the hook for it. That's stupid. That is absolutely crazy. You can't
just click the link. Just click the link in the description below to schedule a complimentary personalized review with ProStatus right now. And we thank you again for watching us here on the YouTube channel. Mike, Ryan, guys, appreciate your guys. Always the amount of time that you guys give to us to help us is incredible. Thank you so much. As always, though, you guys always wrap things up. You get the final word.
This is Ryan Herbert. Thank you so much for watching the Savvy Investor YouTube channel and listening to the Savvy Investor podcast.
This is Mike Kinnett. Stay savvy. We'll see you next time.
Advisory services offered through ProStatus Financial Advisors Group, a registered investment advisor. Insurance licensed in Maryland. ProStatus Financial Advisors Group, LLC is not licensed in all 50 states. To find out if ProStatus Financial Advisors Group is licensed in your state, please call 410-863-1040. ProStatus Group, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through representatives of ProStatus Financial Advisors Group.